Japan inflation hits 40-year high, plus the outlook for 2023. Japan has one of the largest economies in the world, placing third on the global GDP ranking behind China and the United States. Although Japan is weak in natural resources, it manages to use its strengths to the utmost degree to become a global superpower. Japan relies highly on a skilled workforce. It has a highly educated workforce and with a high rate of literacy and a strong focus on technical and vocational education. This enables the country to produce top-of-the-line goods and services that are in demand globally. This, plus technological innovation, a strong export sector, a stable political and economic environment, a diversified economy, and a strong infrastructure make Japan the powerful country that it is today. Recently, Japan's central bank has maintained a policy of ultra-low interest rates despite the country's inflation being driven by currency weakness and imported cost pressures. These factors have caused prices to rise, but the central bank has chosen not to address them through adjustments to interest rates. This is the highest inflation level in 40 years. Inflation in Japan increased by 3.7% year-on-year in the last month, according to data from the Internal Affairs Ministry. This figure, which includes volatile fresh food prices, indicates a rise in prices for processed food items, durable goods such as air conditioners, and electricity. Although lower than the high inflation currently experienced by consumers in countries including the US and Britain, this rate of the price growth is significantly higher than the Bank of Japan's long-term target of 2% inflation. Japan experienced a period of high inflation in the 1980s due to a variety of factors. The major factor was the country's rapid economic growth, which led to a high demand for goods and services and put upward pressure on prices. Other factors that contributed to Japan's inflation in the 80s included an increase in oil prices, a rise in the consumption tax, and a weaker Japanese yen. Plus, the Bank of Japan's monetary policy during this time may have contributed to inflation by maintaining low interest rates and increasing the money supply. Now, the country is facing a similar downturn, although this time around, like most big countries, the inflation is partly as a result of the COVID-19 pandemic that shocked the world. Unlike most superpowers, Japan has managed to prevent the inflation from going out of hand the longest. The Bank of Japan's predictions and plans. There is speculation about whether or not the wages will increase enough to offset the higher cost of living and support consumer spending, even though analysts predict that the economic growth will improve in the current quarter. Recently in December, the Bank of Japan surprised the markets by modifying its yield control and permitting long-term interest rates to rise more, which market participants interpret as a sign that the BOJ is preparing to further reduce its large-scale stimulus measures. Many experts believe that the Bank of Japan will revise its forecast for core consumer inflation, which was made in October and predicts a slowdown to 1.6% in the next fiscal year, following a rise to 2.9% in the current fiscal year ending in March of 2023. Well, that's all, folks. With Japan's economy suffering an inflation, prices for basic amenities like food and energy costs have drastically increased, leaving the citizens worrying. Since there is no stimulus increase in their pay, citizens will have to pay the exaggerated amounts, which will cause a strain in their lifestyle. If you enjoyed watching this video, don't forget to smash the like button, subscribe, and turn on post notifications to get early access to economic and financial news.